Want to bring in to talk more about markets, Stephanie Link, who is chief investment strategist at Hightower, also a CNBC contributor. And Stephanie, we were just talking about these headlines coming from PacWest Bancorp. They did secure $1.4 billion in fully funded cash proceeds from Atlas SP Partners. This is a senior asset-backed financing facility, so I guess this would be first in line. It does have some assets backing it up. Trying to figure out what this means. If you look through the numbers on this, they say they explored the idea of raising capital, decided that wasn't the best way to go about doing it. Also saying that, look, they do have over $11.4 billion in available cash as of March 20th. And as of March 20th, the FDIC insured deposits exceeded 65% of total deposits. What do you think as an investor kind of hearing all of that?
Yeah, it's a lot to digest. First and foremost, I always am a little wary when companies, especially banks, tell you how strong they are, and excuse me, and they kind of go through all of these things. But these are unusual times, and it's good to say for them to tell us what they're doing and to be more transparent. I kind of think it's fascinating that they borrowed $10.5 billion from the discount window, among other federal programs. But I don't think that they could have done a deal, Becky. I mean, the dilution would be unbelievable, right? So, and I think that would spiral things a bit out of control. So, you know, I'm a little wary. We're all watching these regional banks, First Republic as well. But you know, I think that this makes the case, in my opinion, that the largest banks in the country are just so much better equipped for this kind of environment, right, given the massive excess capital that they have. So I think they're going to continue, and I think the big banks are going to continue to gain market share as a result. And I think they already are. You're already hearing that their deposits are going their way. So there's a lot of uneasiness.
Would you put your money there? I guess my question is, because I think the secondary question is not only how you weather difficult times like this, but what the profitability prospects are for any of the banks down the road, given regulations, given the potential for higher fee structures. I think that's what people are trying to figure out, too.
For sure. And I think that you have to be selective on what you're looking at. And obviously, there's a lot of analysis that has to go into it. But I do think when you can get something like a Bank of America for 0.9 times book and with a 3% yield and excess capital and $2 trillion in deposits, I think that is getting, and it's down 16% in a week and a half's time. I kind of think that that's an opportunity. I also think Schwab is a very good opportunity, down 30% with a ton of excess capital. They can get as much as $250 billion in excess capital from various different cash sources. And their deposits are not leaving. Their deposits are mixing and moving towards money market funds.
Is that where you've been putting money?
I think there are opportunities.
Schwab
so those are the two that I have. Those are the two that I have, and I am overweight the financials because I do think, again, they're the big ones, though, Becky, because I think that they will weather the storm better when all the turmoil kind of dissipates.